Thank you.
Okay.
So, welcome to the weekly meeting, 9 November 2025. And today we're going to take a look what we expect from GU and other pair. So, we're going to start from GU, especially. And looking at the 3 month time frame on GU, what we can see is we don't need so much backward price action, right? We only want to focus on, let's see, we only want to focus on this current price action. Let me just say from here, this is what we are focusing on, this current price action, right? And we know that price is seeking liquidity as a primary objective of the market. Then we are seeking balance, which is efficiency. You know, the meaning of balance is efficiency, it's efficient, right? And the meaning of liquidity is basically money. And if we know that price, the market is always looking for money and looking to balance the market as well. So we already know that, okay, either one way or the other, when we take money from this side, they will probably going to the other side to also take money. Or when we take money from this side, if we don't want to go take money from the other side, if the either ways we always looking for money in the market, then probably there will be some kind of money sitting somewhere that we need to take and probably rebalance some area that hasn't been balanced. While we are on our way going for that kind of money that is sitting somewhere that we need to take, you know. So now, looking at this 3 month time frame, like I said, we're looking at this current price action, not all this way back. We might look at all this way back when price is heading towards that area, or that's when we start looking back. But for now, we are looking at this current price action because this is where price is right now. So what is above and below where price is what we are actually interested in, not like the previous old price action. When we look at old price action, if price is in a certain point that tell us that okay, there is time to look at old price action, we will do that. Now we don't want to look at so much old price action backwards, no. And first of all, what I want you guys to also know is that liquidity, which is highs and lows, like resting liquidities, highs and low, can be six in two ways, right? One, like by just wicking the highs or low. Two, by aggressive like candles or something, right? But yeah, if you guys don't know, that's how it could be like six, in different ways. So now looking at this current price action, I'm not going to start. I'm just going to come from where price is right now. So we have what we call break of structure. Actually, it's a break of structure, but I also call it liquidity grab. You can call it a break of structure. Any break of structure for me is a liquidity grab for me. So however you want to reframe that for yourself, you can do that. It is a break of structure, I know. So he's telling me that price is bullish, right? But actually, what is above this area? Liquidity. So that is why I'm telling you, like whether break of structure or something, it doesn't matter. For me, it's liquidity. That is what I mostly put in my head, not just a break of structure. But what is also telling me is that yes, price is trading upward. Fine. And if we take liquidity from here, we move to the other side of the liquidity as well. So from one liquidity point to another liquidity point. Now we have this break of structure. Like I say, liquidity, you can call it break of structure. I will call it liquidity. It doesn't matter. So let's just label it as a break of structure to the upside. So which means we have grab liquidity around this level. So what does price needs to do now? Price now needs to what? Either rebalance inefficiency or go for more liquidity. So looking at this price action, you can say there is liquidity on this swing low. There is liquidity on this previous candle low right here. Let me take this one out. right here, this one. Let me just identify area of liquidity in this time frame. So we have liquidity below this low. We have liquidity below this low. Like I say, we are looking at price action right now, where price is. We also have liquidity below this low. And looking at this low, because this is where price is now, what is here? Inefficiency. So what is this telling us, by the way? That, remember, when price is trading into inefficiency, there are some kind of highs or low that is around that area. And that highs and low, they are liquidity in that area. So what this is telling me, just imagine this candle wasn't printed. So we will have like liquidity taken overall. Then price also took liquidity from this candle high. Now it moved down. We created inefficiency. What happened? Price pulled back up. Now price selling took this low into this inefficiency, right? So now from here we have two choice, right? We have two choice. Can anybody tell me what choices we have? From this current price action or current price right now,
I don't understand the question.
we have two choice in this market right now. From this current price action and this current, like where price is currently at right now.
Yeah.
We have two choice.
Okay.
Choice
Yeah.
one and choice two. Can anybody tell me?
Let me say the choice one is that maybe market is going for the liquidity below.
Okay. And choice two?
Choice two is that maybe market is going for this high.
Correct.
No,
I don't want to know the high you are talking about, but that is very correct. We have two choice from this point of interest right now, or this inefficiency. Choice one is either the market wants to seek lower liquidity by trading lower more, or market wants to move from here to seek higher liquidity. That's the only two choices we have right now. It's simple. Just keep it simple that way. And because you can clearly see the low of this candle is liquidity, and of course the low of this candle is liquidity, which is the swing low, right? Now, remember, this is the current 3-month time frame that is trading. You have to put in mind, because this is the current 3 months. Now, if the market wants to go for higher liquidity, it means maybe we are coming for this higher liquidity as well, which means it's going to what? What does that mean? That means price took out this high, came to rebalance this inefficiency. Now it's taking out that high again. Or price wants to go for lower liquidity, because the one we find here is not enough, and we will now accumulate right here, then go for lower liquidity here or here. It's just a matter of choice. And this is the two choices that the market has right now. Either go up or down. Do you guys understand?
Yes.
What is going to tell us that the price is moving from here up, or move from here coming back down more for liquidity, is when we move down to a lower time frame. But from this time frame, what we can see, price has rebalanced this inefficiency that we created during this up move. Are we understood? So it's now to drop down to your lower time frame. From your lower time frame, what can we see? We have this low. We have this 3-month level, but we can just keep it or something. It's a level where price can also respect, and we have this liquidity. So let's say price wants to respect this level. That means we are taking this liquidity and this low and respecting this level right here. You can call it order block, something, it doesn't really matter. Respecting this level right here and continue going higher. But what about price doesn't want to respect, like come down, and we want to move from here? You can see this same 3-month inefficiency is also in the monthly time frame inefficiency. So which means we have two higher time frames aligning in the same point as inefficiency. So which is kind of a very strong inefficiency. Now, looking at the monthly time frame, what can we see here? Let's take this one out. This one. What can we see in the monthly time frame? Remember, we're coming from the 3 months. So what can we see in the monthly time frame? All we can see right now is that we are in this inefficiency, and price has taken previous month low, as well as like previous week low or something. And what can we be expecting from here? Are we coming for this high, previous month high, or there are some kind of internal highs that we are coming for price to continue going down? Because looking at this time frame right now, all we can see is price is seeking lower liquidity. There is nothing telling us that price wants to go higher from here, apart from price is like inside this inefficiency that he just rebalanced. Nothing else is telling us that price wants to go higher yet. So now we can go down to the weekly time frame. As well, looking at the weekly time frame, we are still in the same context. Nothing is telling us that price wants to go for higher liquidity until we keep going down. Because what usually happens is that when we have higher time frame liquidity, these are the area lower time frame will likely deliver price to later on. So from lower time frame, we can literally notice, okay, if price is going to deliver, price action, order flow to the upper liquidity or lower liquidity. But this time frame from the weekly, what we can see is that after price have traded into this 3 month inefficiency and monthly inefficiency, has taken multiple liquidity, and now what we can see, we created an imbalance, which is inefficiency on the weekly time frame. This is where we are going to know now, because for sure price is coming into this inefficiency. Whether from this inefficiency we are going higher and higher, we don't know. But this week is what is going to tell us that we are going higher and higher, or we are going lower and lower. For price, we will be expecting price to trade into this inefficiency and give us some kind of confirmation that wants to go higher, or we want to continue going lower. What does mean? We might come for this low and probably this other low. So we have weekly inefficiency. Remember, previous week low has been taken, and we have like previous 2 weeks low, basically, has been taken, and we have this current price action now. And this candlestick, this is a hammer, right? It's usually a sign of reversal. You can see how price, sellers push price down and buyers push it back up. So what did they do? They push price to what? Equilibrium, basically to where they agree on price before buyers took this market higher. Now, what can we anticipate or find out this week? For what I can see personally, I would like price to trade into this inefficiency. And from here, I can see if price wants to start going down or going higher. And if price wants to start going down, then we might have new targets, such as all of this, the current one first, then this one, then there is other low right here. So we know we have targets down here. And if price wants to continue going higher, we know we have targets, multiple highs, and overall high that price may be targeting. Are we clear? So looking at the daily time frame, what can I see? This is where the work begins. What can I see? So what I can see, this weekly inefficiency, the price hasn't traded it all. Let me take this one out.
Yeah, imbalance.
What?
I see an imbalance.
Yeah. So we also have daily inefficiency inside the weekly inefficiency right there. So which means double inefficiency, weekly and daily. like I say, I would like to see price trade into this area. Then from here, I will see if price wants to go higher for more liquidity. We have a lot to the overall, or price wants to continue going down. Now remember, like I said, this is where your work begins, right? From your weekly time frame, where do you have your range? I'm going to put long line. Your range start from here. From your daily time frame, we have a range from here to here, and from here to here. Now, the reason why I'm pointing this out is we are going to look at a bigger picture, a clearer picture right here. Now, your market structure. We have the last area of interest right here that got valuated, price moved down. What happened? Price came here. You can see like this right here. And usually it's this area right here. Price moved down to what? Take out this liquidity. Like I said, you can call it break of structure or liquidity, doesn't matter. Came here. What price do? Traded into this inefficiency. Now, what are we expecting? Are we expecting price to move back into this area? I mean, we have a lot of area quiet. Or this area right here. We don't know yet. But from here, like I say, this is when we are going to know. Why? Because if price fail to respect this inefficiency to continue going down, which means we might be coming for higher liquidity here, and probably respect this area to start selling. We don't know yet, but from here, we will know. So we are not going to like, oh yeah, price is coming here straight away. Why are we waiting for price to come here when we can be able to trade this price back there if it's coming there, or trade it to this downside if it's going to go down? So from here, we will eventually know where price is going to go. For sure, price is showing us sign of downside, like I explained from the higher time frame. Nothing is telling us that price is going higher yet, but from the smaller time frame, we will eventually see or know if price is going higher or we continue going down. But we already have our buy side liquidity mapped out and sell side liquidity mapped out. Now, from this daily time frame, there's, again, I'm going to repeat myself, there is what we call change in state of delivery, which all of you already know, right? Now, when price first traded into this inefficiency, price accumulates 1, 2, then price swept the low of that accumulation. Now, price has given us what we call a change in state of delivery right here. This is where change in state of delivery occur in GU. Again, like I say, until the lower time frame tells us that we are going higher, this is when we will know that we are going higher. So now we have a change in state of delivery from where? From the 3-month and monthly time frame inefficiency, and which is telling us that price wants to move higher. But also we have a daily and weekly inefficiency from a weekly level perspective. So which means for sure price needs to deliver higher, but we don't know to which point. We have a lot of points of interest right here, such as liquidity resting above highs and highs and highs, and of course other area such as inefficiencies. But right now the daily has told me that price wants to deliver higher, at least to either a bigger time frame inefficiency, which is this weekly time frame inefficiency, or this daily inefficiency. You don't need to be greedy or open your eye that, yeah, price is now bullish, then we want to target all this up or see all the way up here. No, price is bearish. At the same time, the lower time frame just tells us that we are going higher now. But to where? You have a range that you are looking at to trade this market to. In that range, you will look for your point of interest in that range. It's only when price trade into your point of interest, but it doesn't tell you that we want to turn around from there. That is when you are now aiming for the next point of interest, the next liquidity area.
I have a question, Andrew.
Yes, sir.
So are you waiting until it gets to the point of interest before you decide your trade, or are you trading up to the buy first, then you decide after that?
So now, let's use GU for example. Remember, this area is weekly inefficiency, right? Which means I kind of want GU to pull back and trade into this area. I don't know how many pips it might be, but from this current price action right now, at least we can get 100 pips, depending on how Monday even trade. Only Monday can give you like 100 pips or more. And it could be like the whole week, who knows? But first of all, my target from anywhere price is right now is to this inefficiency. What does price do? Seeks liquidity, rebalancing efficiency. So I knew that price has six multiple liquidity, such as higher time frame lows. Now, if you go back to the higher time frame, let's go back to the higher time frame. Where is it likely to trade to? First, this candle is an inefficiency candle, which means price might be rebalancing this inefficiency candle, or price might be seeking the high of this candle, right? This is where we see, this is what we see in the higher time frame. But now, the lower time frame, what is it telling you? I mean, it's not lower time frame, but like, the next time frame. What is it telling you? That if price is not coming for this high, or all of this high, there is inefficiency here that price might be rebalancing, which means, remember, this candle high now will now become liquidity right here. So this can be liquidity for this inefficiency. And what does price needs to do? Price can just trade into this area, take out this rebalance this inefficiency, and continue going down. It can do something like this. Why? If it fails to give you the chance to continue going down, that means it's not telling you that price wants to take this high or multiple highs all the way, because that is basically the story is going to tell you. In every trade, there is always two options to read. Always two options to read. That is why we say the market, yeah. Here. So if price is not offering basically fair value or something, is usually doing one of two things, either seeking liquidity or seeking efficiency, right? Now, again, we seek liquidity. Here is inefficiency. So if we trade into this inefficiency, it doesn't want to come down for liquidity. That means it's now seeking higher liquidity. It's all about that liquidity and balancing the market. That is the only two things. It's left for you, like I always say, the trader, to know at where price is right now, what is next? What are we doing next? Is there more inefficiency that we need to balance to the upside, or continue to the downside for more lower liquidities, or continue to the upside for higher liquidities? Is either that inefficiency or liquidity. So right now, from the weekly, of course, from the monthly, we have a huge candle inefficiency, right? Which means that from the high of that candle, low of that candle, they are liquidity. And the body is inefficiency because of the displacement, right? And remember, price doesn't really actually need to go all the way. It's all about equilibrium. So anywhere price found equilibrium, and remember, in the lower time frame, there were going to be highs and lows. I mean, in this case, price is going higher, so we're going to use high. There are going to be highs that will serve as liquidity for this market. But the most important thing is where they find equilibrium is where price is going to respect and what? Move away from there. It could be the 50% of this candle that they will find equilibrium. It could just be as soon as they trade into this weekly inefficiency, they will find equilibrium. So which means this previous week green candle could serve as liquidity for this inefficiency for them to find their equilibrium right here. So remember, previous month high is here. So it doesn't really need to come all the way or here to find equilibrium for buyers and sellers to agree on price. So it's all about liquidity and efficiency. And one thing you also need to know that this equilibrium we are talking about, if price take out liquidity before price will buy, or at the point where price will start buying from, that is where price markets, both participants find equilibrium. So liquidity has been taken as far as their thing. Now, is sellers going to keep on pushing the price down, or buyers want to step in to push the price up? So both of them has to agree on one thing. So at that area where they agree on one thing, that is where the equilibrium is. It's the same thing as if price will take out this high and trade into this inefficiency. Now, price has balanced this inefficiency. So it is now up to the buyers and seller to agree on price for which party is going to take over the price now. To the downside or to the upside. And if it's to the upside, that means price is no longer in this inefficiency. It's now going for higher liquidity. And after taking liquidity, then they will now decide again who is going to take over. And as soon as one of the parties take over, you already know that there is equilibrium. That is where they agreeing on price. So again, me looking at this price action, like I say, I automatically know that we are trading into this inefficiency, either to continue going higher for more prices or continue going down. Why? Because I have seen my change in state of delivery from this inefficiency area. Remember, what I'm telling you now is this prime example. We traded into this inefficiency. We don't know who is going to take over this trade, this price action. Price wants to continue going higher or lower. If he wants to, continue going lower or going higher. So what happens next right here is what will determine what price wants to do. And from here, price gave us change the state of delivery, which tells us that price wants to go higher. But now, the next question is, how high can it go before it will find equilibrium? How high can it go before it will find equilibrium? Now, we have inefficiencies, we have multiple liquidities, all these highs and shade, they are liquidity, and we have inefficiency. So which means we know that price can go all to this area, but we don't know if it's going to go all the way here first, or like up to this all the way here. We don't know that. But for sure, we know that price can come into this inefficiency, because from here, we have seen that potential buy opportunity to that area. But from here is what we also know if price wants to keep going higher. So it can do it in different ways. It can just go aggressively through this area, and that is telling you that price is not just coming for rebalancing, it's coming for liquidity itself. How price move is going to tell you if it's just going to come here and respect or blew through it, and that will also give you a sign that price is now coming for liquidity. It's not coming for inefficiency, it's coming for both inefficiency and liquidity, because this price needs liquidity at all cost. This market needs liquidity at all cost. Like I say, price gave me a change in state of delivery right here. So what I'm looking at is for possible rebalance and continue to this area. So it depends on you guys. to this area, and like I said, we might see at least 100 pips. 100 pips can come out from here, depend how much lower you go, but yeah, I think we can see 100 pips or at least minimum 50 pips to this inefficiency. So now looking at the 4-hour time frame, like I say, we have, remember, daily inefficiency and the weekly inefficiency right here. And we have the last area after change in state of delivery, this low and this high. And we also have inefficiency around this level right here. So I will be expecting price. And this depends on our session again, because we cannot really determine, but I would like price to come here and move all the way, at least to this area. If we want to keep breaking highs, and we don't respect this inefficiency, then it's simple. We are coming for this high, probably this high or this high. It is simple. And it can even go more higher. Because in this time frame, there is area right here that hasn't been mitigated. So we could go for high, and tap into this area before selling. But for sure, like I say, in the daily time frame, I just know price wants to go higher, whether to this inefficiency or to these highs. Price will tell us. It's not something that you want to predict. Now we see clearly price is going higher, but how far can it go is the question. And price action will tell us. As price is trading day by day, it will tell us how far we are going. You don't need to stress or complicate it. Just follow the price action day by day. It will tell you how far we are going, where we are going to turn around from. And remember, and as soon as we turn around, now you have like chances to target lows, because now price is bearish somehow, even if overall is bullish. Now, if you turn around again for that opportunity to go low, that means it's coming for where the price is coming from, right? These lows and probably all of these lows, because we have identified them from the higher time frame perspective. So that is the good thing about it. Then if you probably have the opportunity to take a trade from up here, then there is a chance you can hold it up to this area or up to this area. This is the 4-hour. Again, we have this inefficiency that is going to push price higher. If price wants to go higher from here, like I say, wait for confirmation around this level, because the daily has given us a confirmation. We just want a confirmation from the lower time frame for it to correspond with the daily for higher prices. That is the only thing you are waiting for now. Price is going to start, I don't know, probably selling or go straight up. It doesn't matter. If price is coming down, depending where it reach, and depending on the session, if you see any mistaken a shift in market structure, then you know price is now going higher. Whether to this inefficiency or high, we will definitely know around here. Like I keep saying, you don't need to worry about anything. Just wait for price to get there, at least to the closest point of interest that you know of right now is this area. This inefficiency that needs to be rebalanced. So from here, then we can decide if we want to go higher or go lower. It's simple. Is any question?
Yeah.
What is your
Do
question?
you trade London section?
I trade London
Hello?
session, but now, because every day you come to the market, you see different things. Now, with these two pair, gold and GU, they tend to move more better in New York session. This is not what I trade. It's what you as a trader is following, because you have a system that works. So you come to London session, there is no trade for you. What do? You relax, you
You
come for
wait
the
for
next
the next
session.
section.
That's it. if you only want to trade one session, then as soon as you didn't find your entry or that opportunity in London session, that means you don't have trade for the day. There is nothing like you are coming back for New York session. That is your choice to make. I just want to stick to one session. If I come, I didn't see any opportunity, then I'm not going to trade for the day. I can just go out and do my stuff for the rest of the day. It's a choice. It's a choice that individual trader has to make.
But I want to ask a question. Like, what about you? Like, how many sections do you trade?
Again, it's a choice. I only trade London and New York, basically. And like I'm telling you again, New York session give me the most opportunity because I can take a trade in London session, it will not move until in New York session.
Yeah. Yeah.
So again, it's a choice. And what is that telling me either ways? Of course, I still need to show up in London. But it's just like gradually telling me, hey, why don't you even just focus on New York session? It is a choice. You that is asking this question, have you wake up in London session and look at the market? Oh yeah, I don't have opportunity to trade, so I'm going to
Yeah,
come
yeah,
back to
yeah.
New York session.
Yeah, yeah, yeah. It's a lot of times.
So then you should know that at this point, I don't need to trade London session or something. I'm going to be trading New York session. It's just a choice, not what I'm trading. I can come to the market at any time of the day. I can still find opportunity because why? I am monitoring the market at all costs. It doesn't necessarily have to give me that entry as New York open or something. It could be like 2 hours after New York open. Then I can get my opportunity. But what is see that is still New York session, you know? So it's always a choice, individual traders. And mostly get this opportunity to trade from New York session. That is when the entry comes, like mostly. I've seen it. Yeah, you can take entry from London session or something. Yeah, but like I'm saying, most of the time now I'll find out like, yes, New York session trade move the most. Like I tell you, I can take a trade from London session. It will not move until New York session. So what is the point of me even taking it in the London session in that way? Why holding that trade for so long? Then it started moving in New York session. You see? So it's different. And if you are looking at the market every day by day, and you will be taking into account like different action that the market is like, different action the market is possessing, you know. So it's just different traders and different choice and different section of like which they want to trade. Alrighty. So like
Yep.
I'm saying, price needs to go higher. Whether we are going to gap up right now, we don't know because we don't even know what happened during the weekend. If there has been like crazy fundamental, you know, with Trump and other countries, who knows? So we don't know what is going to happen when market will open now. It could just gap up straight where into this area, and what happened next? Then we'll start to see if price wants to continue going higher or coming down. We don't know, but we will see. But like I say, price has shown me a good faith that price wants to keep going higher. But to where exactly, like I say, we don't know. It could be this liquidity up here all the way. And again, you already know that it's two things. Either SIX liquidity or rebalance inefficiency, right? So that is what you should be expecting. We have inefficiency right here that price needs to rebalance, and we have liquidity all the way here. So if price trade into this inefficiency, I keep repeating myself. Maybe you don't have the opportunity to trade this price into this inefficiency, but you might have the opportunity to trade this market from this inefficiency to the upside or from this inefficiency to the downside. It's like, again, pay attention. First, price is coming here for sure. Whether you are taking this opportunity into this inefficiency, or you are taking this this opportunity from this inefficiency to the upside or to the downside. That is basically what price is going to do. Nothing too complicated. Just follow the same procedure and you will get your results.
Okay, can we take a look at gold?
So you don't have any question, any other question?
Oh, no. I understand.
Okay. Will, what about you? Is Will here? Yeah. Wisdom?
Yes, sir. Yes, sir. Yes, sir.
Do you have any question? First of all, let me
I'm
ask
kind
you
of confused from the bigger picture.
what?
Okay, sir.
No, repeat what you say.
You want to ask me something? I said okay.
Yeah.
I said first of all, where I kind of have the confusion is starting from the bigger picture where we saw on the 3 months
Yes.
from right.
Yes. So again, it's okay. We are here to learn. Again,
Zoom in. Okay.
again, remember. Like I say, I don't want to like put that impression in you guys, right? I don't want to put that impression in you guys, right? Remember, this is the very first candle that traded into this inefficiency. And this candle, it has like 3 months. So from today, it has 1 month, 23 days left in this candle, right? It has 1 month and 23 days left on this candle. Now, if this candle was designed to rebalance this inefficiency or to seek more liquidity down, right?
Okay.
You cannot know right now because 1 month and 23 days left. So in 3 months, we have only completed 1 trading month and some days. Do you understand what I'm saying?
Yes, sir.
Every candle here represents 3 months, right? So which means
Yes, sir.
at the time price took out this liquidity, price have a choice to come into this inefficiency to either continue going higher all the way here or continue going down to seek more liquidity. That is 2 things that the market needs to do. But it can do either of these. But we have 1 month, 23 days left. So you cannot really tell now that price is going higher. What about another month, which is this current month we are in? Price will just go higher, take out this high. Then the last month, which is December, price will trade down and come and take out this low. That is where it's much possible. That is why you cannot just say this 3-month candle that is currently trading, we expect price to continue going higher from this inefficiency. You cannot say that.
Okay.
We have 1 month and 23 days left. On a normal day, if this is like probably like the daily or the 4-hour time frame like this, I can literally say, yeah, maybe price is going to move from here back to this up.
Okay,
like
sir.
it could be easier to say that, but from the 3-month perspective, this month have like 23 days left. Price can still do wonder. Price can trade all the way down just within this month. And the last 3rd month, which is the last quarter, the last month in the quarter, We cannot move from this down to up all the way. It's possible like that. That's why you don't need to predict this bigger time frame. But you know for sure, price is certainly going to do one thing from here, either back up or back down. And coming down, going down to the lower time frame, you might have multiple lows that price needs to take, including this current one, including this one, and more. Are you going to predict it like that? No. You are following the order flow now. What does the order flow say? The order flow said that price is in a good phase of coming down, but while coming down, we also need liquidity to be coming down. So which means if this price needs to sell, we need some kind of liquidity above to continue going down. That is how simple it is. But where is it coming for this monthly high? We don't know. Is it coming from internal highs, which is like the weeklies or dailies? We don't know. Do you understand?
Yes, sir.
That's why you follow what the price is doing. Now, the weekly is what we have now. We can literally see that we have weekly inefficiency and previous week high, which is liquidity. Now we now took like last week, previous week low and created inefficiency. So now we know liquidity has been sick from the downside. Is price coming to rebalance this inefficiency or coming for this liquidity to probably continue going down? You don't know that until first we did this inefficiency and this liquidity. Which one comes first?
The inefficiency.
Correct. Which means price will trade into this inefficiency first. That's why I tell you, once price get into this inefficiency, we can know that if price wants to continue for more liquidity up, or it wants to move away from this inefficiency back down to take this low, or probably more lows down. That is why you should follow the price like that. Nothing too crazy to predict price is going all the way back up. No, because we have 1 month and 23 days left. It's a lot. Price can do crazy things. Do you understand? Okay, now, again, from the daily time frame, looking at the last internal structure, right? We have this high all the way here. We have this low, equal lows. Price now run this equal lows down here. So we were literally looking for a change in state of delivery. Price moved down to that low. We didn't see that. Price moved. We started accumulating here. Then what happened? Price now takes more liquidity here, still in that higher time frame inefficiency. After that, price now turned around, gave us a change in state of delivery, which tells us that price wants to keep going higher now. Again, to where? Here first, probably here. You cannot just take a trade from here, for example, I just say like this, it doesn't matter, and just say, oh yeah, my TP is here, because you don't know.
It's stopped out.
You don't know. You follow the price action daily, day by day, and the way the candle is closing, it will tell you that price wants to continue going higher or it wants to continue going lower. From where? From this inefficiency, the very first point of interest in our area after trading into this inefficiency, giving us change in state of delivery, and price saying that he wants to go higher. So the very first point of interest that you might notice is this one. This is where price is going to tell us we are going down or up. And if price tell you that we are going up, where is the next area? Here. I know people want to say, yeah, there is an order block here. No. This is when price is now going for liquidity. Yeah, we know there's some initial accumulation here. Yes, but yeah, you can also watch here because there is an initial accumulation before this break to the downside, and there is another initial accumulation before price break to the downside. You see now, price is not respecting that initial accumulation. What does it mean? We seek liquidity, this like change state of delivery. Now, it's telling us that price is going higher. Now, to where? Maybe to rebalance this inefficiency or to take out this liquidity for sure. When price is starting to disrespect area like internal highs or stuff, then you know it's what? It's going for liquidity or inefficiency. That is the only two things you should always have in mind. Not like your area, like for example, if you will say my other block is here. If price doesn't respect this other block, that means it's just going for liquidity. It's not because your other block was not right. It was right. It just needed more liquidity, including yours that you put your entry here. It just needed more liquidity. That is why liquidity is what you should put forth in this market. Market hasn't opened yet. Is it opening 11 now or 10? Will. Where is Will? Is Will here?
Boss Andrew, good evening.
Good evening.
Please, I have a question.
Okay.
It's like you said if price shouldn't respect this other block, that means it's after liquidity, right?
For
So
sure.
how
When
then
price is not respecting, because price is seeking liquidity and seeking efficiency, right? Which is it's looking for
yes,
money and balancing. Money and balance often, every day. So if you will have a point of interest such as like imbalance, like fair value gap or other block, you understand? If price doesn't
yeah,
respect this level, that means it's going for liquidity. The only reason it didn't respect that level is because of it's going for more liquidity. That's all. And
okay,
from there, instead of sitting looking at the market, you can literally trade the market to a liquidity point like pool, highs or
okay,
low, because that is where it's coming from. That is the reason why he didn't respect your point of interest.
okay.
Mm-hmm.
Thank you.
Yes. So this was initial accumulation. Price, what did he do? He came there, respect that level. Why did you think price didn't sell from here? Did you think that price this area was not valid? It was valid. He came there, he respected that area. What do you see? Now it's not seeking liquidity, basically. And he took out that high. And during the point of taking out that high, this is the last area. Let me take this one. So now, if price will now disrespect this level, it's telling you that price is coming down now. But again, we have inefficiency here. That is where price might be heading to because it has given us change state of delivery, even if it's also liquidity that price did grab above this high right here. Even if price did grab liquidity, but it also give change state of delivery. So to where either to this inefficiency to balance this inefficiency, and from here you can decide to go down or continue going higher. So yeah, Jackson,
Yes, sir.
is that clear?
Yes, sir.
So I know you are like looking at price or something like trying to find out something. So the trade that you managed to look at, or do you know what time you take this trade or look at this trade?
Like, what do you mean? What time you should be
What
trading in?
time exactly did you see like these entries or something, or this setup came, form or something?
Okay, like for me, mostly I usually start from the weekly when I want to trade, just mark the highs and lows, and I think it's just now that I'm figuring out how you see the bigger pictures because just I just look at previous
No, no,
week
it's okay
highs
to start from the weekly
and
time
lows rather
frame,
than
but when month
okay.
end, you always have to start from the monthly time frame. Of course, you can also go higher, but it's okay to start from the weekly time frame because that is basically now, like looking at the market. I just wanted to show you why price is moving away back up from the higher time frame perspective. Because right here, you might not see anything apart from this OC level, right? Apart from this OC
Okay.
level, you might not see anything, but there was a bigger picture inefficiency right here. That's why I take you back, you guys back to the monthly and the 3 months time frame for you to know that it's not just this OC level. There was other inefficiency right here, you know. So, like I say, price can just decide to move all the way back up. There is nothing wrong with that. But the only thing that we need to know is we can follow the price action gradually until we get there. Just like the way we follow this price action from here back down here, because we didn't know like, yeah, price is coming for this area. So it's just the same thing. You can also follow this price action back all the way up because daily, okay, now market open. Ah, there. Okay, gold hasn't opened yet. But yeah, GU open. Now price gap down a little bit, price gap down. Like I say, for me, I know this is like Asia session or something, right? I would like price to come into this area and start moving up into where this inefficiency. So even if he wants to start selling from this inefficiency, maybe during London or New York, it doesn't matter. But I would like price to first of all move into where this area, then trade into this inefficiency. That will be what I would like.
I have a question.
Okay.
What about if price does not respect does not get to the inefficiency and start selling
Here,
at this OC level? From this point, it starts selling down. Take at this OC level, like
take
this
out
open.
this low.
Yeah, take at this low. Yeah,
It automatically tells you that price is coming down. That this like I showed you before, there is nothing confusing here.
yeah.
This was the initial high, and this is the initial low. Price disrespected this level
Mm,
as what? It took liquidity.
yeah, that's true.
So it has the whole right.
To still come
But
in.
the only thing that you cannot participate here because you don't have any clear area. So as soon as it disrespects this level, it now tells you that price wants to keep going down. That's all.
Okay.
That this move was just what? Liquidity, basically.
Okay. Okay.
It's just the same thing. Liquidity has been taken. Is
Thank you.
price going to disrespect? I told you this is a low and a high right now. So we need price to respect this area for price to continue going higher, which means if price will trade into this any of this area, you can look for opportunity to buy. If there is no opportunity, you stay away, right? Which means once price do like this, then you already know the opportunity is in the other side of the market.
Yes, sir.
So any other question? No other question? Okay, now let's look at gold. Mhm. Yes, like this. So gold from the weekly perspective, and again, there is nothing you guys will not understand here, you know. Now we know that first week rebalance, and of course tap into this inefficiency a little bit, and price has always been in this inefficiency right now. Remember, when liquidity or price trade into inefficiency, again, this is for all of you. What do we need to see? We need to see some kind of accumulation. Last week, price was accumulating. This is to tell you that price can only do two things right here: either go up or go down, especially when we have accumulation phase. We took out low into this inefficiency. Then price now gave us inside bar and what? Consolidation. This is price offering fair value now. This is how price offer fair value. It's now deciding if he wants to go down more or go higher. Now, let's take a look. Like we have previous week, I mean, not this is the previous week, but like 2 weeks high and 2 weeks low. So which means from this consolidation phase, price can decide to go down, even go down more, or go up to this side, or even go up more. You know, so this is what price can do after this phase, or it can just decide to offer more fair value to consolidate more. It's possible because we don't even know how price is going to open now. So it's possible either to consolidate more while still offering fair value, because the equilibrium has not yet been found. Like price, buyers and sellers haven't agreed on price yet. Then we continue going what? Sideways. But once they agree on price, one of the party to take the price, then it's either we are coming down for this low, more area, inefficiency, more lows, or we are going higher for what? Highs. This is what we can expect from here. Now, going to the daily time frame, we also have when price has traded into this area, take out this area into this what? The daily inefficiency as well, right here. You can see these are just okay. So we have inefficiency. Price now move back into this inefficiency as well. Now we started what? Another kind of accumulation. Again, this is the daily time frame minus the weekly. We took out this low, then price now start to move higher. Again, we are still accumulating within this whole area. Bigger time frame, inefficiency, daily inefficiency, and daily inefficiency. So right now, price is just what? Balanced. We are not aggressively moving to the upside or downside. So we don't have much like talks around this area. Now, if you go to the 4 hour, so 4 hour can also give us a little bit of clue. From this accumulation phase, what do we have? What do we see? What do we have right here? We did have when price traded into this area, took liquidity, we trade higher, again, break this high. Now price pull back, took these lows, but still respecting this low. Now price traded higher again. What do we do? We can say we break above it, but you know, everybody has different way of looking at market. For me, especially, I look the market in both ways, whether with body or with wicks, right? Not like wicks like above highs. No, I mean like I can mark out the highs of the week and I want body to close above them. I can also mark out just the body like this and I want body to close above them. I use both ways. And this is my way. It's different, like, you know, it could be different from yours. You have to practice and to know when you will confirm your break or something. for me, I can confirm my break in two ways, in both ways. Whether the wicks for body to close above them or just body for body to close above them. So for me, I know this, whether with body and wicks, this confirmed, and price pull back down, it move higher. This is the only way. Now, after that, price, I would say a break for me. Now it started accumulating around this phase. Now I'm going to read this area for you. This was the last area that price did not close below. But unfortunately, from here, price now closed below it. What happened? Price pulled back and moved down. So where did price move down to? All the way towards to this low. And it failed to take out this low. Now, where is the last point of interest that price moved from here? So what happened? Price was trading back. It should have respected this area and continued going down. If this price was kind of bearish now, it could have continued going lower. But what happened? Price disrespect that area. You can call it liquidity, all this kind of stuff. But the most important thing is you don't want to see the low that disrespect that area gets evaluated. In this case, again, this low was also evaluated right there because it's the last area that, Now, again, here, we haven't have like a shift or something, Then, this is just like, 4-hour time frame. So if you go down to the, what is it called? 1 hour time frame, like I say, we haven't had, okay, let me mark it out again. Any valuation of this high, but I think price is going to violate it either ways because looking at this overall, except price now want to trade back into this level. This inefficiency right here, like this, before price wants to start moving because actually all of these are just liquidity right now. In this what? In this area. Let me see where the weekly low is right here. Here is the weekly low, previous week low, and previous week high. Remember, accumulation phase, we might need to see one of the sides get manipulated. So for what I was looking at, I would like to see price manipulate the high first, then come for the low. Then from the low, we can see price delivering to the upside. I don't know how gold move, but yeah, this is my take on gold. I would like to see the high manipulated first, get manipulated first. Maybe you come for more highs or something. Then price can trade back down, manipulate the low. I don't know how far. Then we can literally see maybe a potential long on gold, depending maybe for this high, previous week's high or something. But yeah, we will see. But for now, where price is at right now is that price disrespected this area overall, and we have inefficiency right here that price has not traded into. Take this one out. It's just a low and this low. So price has not traded into this inefficiency right here. And price did close below this area somehow. It's line chart like that. And price is respecting that high. I would like to, price might sell, but I will personally like price to take out this high first before selling to the downside. Anything is possible either ways. But yeah, I would like something like that. And looking at this candle, how it moved and reject. I mean, we took some highs right here, especially price traded into this area and rejected right here. Because this is like the last area. Remember again, when I mark this area out, this is where price moved to take out this low, even if price coming back here, but we didn't necessarily hit all the way, to this area. But yeah, we also move. Now price took out this area, move, nothing happened. After changing character right here, still respecting this high, but it just went all the way to tap into this area and it's still being respected. So I would like to see probably move higher to take out this overall high, then come down, or it might just come down into this inefficiency before going higher. But remember, previous week low is very important right here, because this candle is inside bar, and of course it's an accumulation phase, which means if this week is going to be bullish somehow, I've seen something like this before. We take this, doesn't matter, come back here, go bullish, then from here we'll now be going higher for the rest of the week. That is why I say I would like to see up get manipulated, showing us, okay, maybe that is where price is going to go for the rest of the week, but we might come down for probably manipulation of the downside before price will start going for higher liquidity or something. This is what I would like for price to do on gold. Manipulate first, then come back again, manipulate, which means the buyers and the sellers, then we now continue going to the upside. This is what I would like for gold to do. But now, with this price action, kind of bullish and bearish, somehow. But again, this is just what's it called? Lower time frame and accumulation phase as well. So it doesn't really tell much. But we have this high and this low as liquidity. So the reason why I'm telling you guys that I would like high price to manipulate the high first, because if you look at this high and this low, this is the nearest draw on liquidity, this high. This downside is way far away, which means I don't know how gold will perform this week, but if we might leave liquidity to move price down, so we might kind of want to seek this high, seek liquidity up here to now move price down, So that's why I would like price again to do this, take this liquidity and move down, get enough liquidity here to move down, then take this liquidity, then maybe during the midweek or something, we can start going higher. This is what I would like personally. And probably it might be like this, but I don't know. I will just wait and see what price we do.
I have a question.
Go on.
What do you mean by you would like price to manipulate that high? I don't understand what you mean by the manipulation.
So manipulate means deceive, right? I would like price to trade higher to deceive people that, yeah, it wants to buy. Now, it will come back down,
Yeah.
take out the downside and deceive them that I want to sell before it will now go to the original direction. And that first one was correct, but of course, not yet ready to buy. It just first of all deceive them just to take money, then come down, take money again before going to this other side. But what I'm looking for is the same thing, right? I can trade this market up, I can trade it down by just looking at simple things, the same thing. It change the state of delivery after price has seek liquidity. And, then I will be looking for opportunity. So if you might say price seeks liquidity right here, have we see any change in state of delivery? Because this is where price move all the way up. Let's see right there. Where? Here. Right here. So you can see price have not breaking this low, right? It's still intact, very, very intact. I think this low is taking, that is when you can be thinking about, price wants to keep selling. Say this is just liquidity to trade into a point of interest of this one. So for you to sell now, just like I'm saying, we need to see a change in state of delivery of this level. Now you can now identify that price has traded into this A level right here after manipulating, taking liquidities. Now price now do change the state of delivery and come down. But for now, you cannot really buy sell or probably buy. But I value the buy somehow because and this area price is still like going higher, you know. Came here, move higher, but even if we didn't take out this high, just like manipulation first. So yeah, it's still very, very, very much okay for me to hold buys like this. But until price take out this low, then price has been invalidated. Now we are not looking for a new way to go lower. Probably to this inefficiency, because that is where price did change character, all of this before into that area. So now you cannot look to target this level and probably continue higher. Of course, if he doesn't respect this level, then we are coming for the low, like I say, But if you respect this level, then we might be going higher from here. So it's always different scenario, but the same thing you are looking at. Just the same thoughts in your head. You want to see price will change the state of delivery from your point of interest and all of that. So any other question before we log off? Favor, any question?
No, sir.
How are you doing, by the way? Are you putting in work?
Yes, I'm trying.
Okay. And how is it for you? You feel like you are coming closer?
Yes, not bad. Not
Okay.
bad. But what I focus more on is a candle, let's say lower time frame candle range, like 1 hour, 4 hour, 2 hours,
Yeah.
instead of targeting or like the daily candle range. I just go
Yeah.
for, let's say, if I see the setup on the 1 hour time frame,
Yeah.
when price manipulates,
Yeah.
you understand, then I'll look for on a more lower time frame, I'll look for a shift to take
Yeah.
out
Yeah.
that
Yeah.
same 1 hour candle range.
And I can tell you, right? I can tell you,
Yeah,
like I use 5 minutes, 1 minute sometimes, but you always learn, and there is always something, right? So
yeah,
maybe you're looking at 1 hour range or 4 hour range or something, it doesn't matter, right?
yeah,
I can tell you, even with the 15 minutes, you can always get your shift. And
yeah,
if you get a shift from the 15 minutes of 1 hour or 4 hour range, trust me, that is a perfect thing, is a perfect entry. So, like you even going down to 1 minute, 5 minutes, you might see like a lot of shifts, which is not
yeah,
bad, but still it's like so much noise, so much noise. You can
yeah.
do it, like I say, you can do it, but I don't
And
really,
that's my problem. And
I
that's
don't
what
really want you
that
guys. Yeah, what did you say?
and that's one problem I face because when I'm looking at maybe, for example, the 4 hour range, and
Yeah,
I go to the 15 minutes, I didn't see any shift. Maybe just like um 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 price sweeping the high of the 4 hour, and I go to that
mhm.
15 minutes, I don't see anything. Go to 5 minutes, I don't see anything. If I go to 1 minute, I'll be seeing different shifts, and I'm like,
Yes,
price
and
will
it's
shift,
not
come back
good.
higher again, and the noise is too much. Then I lose my confidence, and I'm like, maybe
Correct.
when I come
That
back
is
for
why you
protection,
see me.
I'll.
It's not because maybe I cannot take in the 1 minute. So I have a way of looking at market, right? Let's say, let me just use an example. Let's just say, for example, right? Let's just say, for example, So yeah, price traded into this area right now, here, right? So I'm waiting for 15 minute shift, right? And remember, now watch. So price needs to take out this low for a shift in 15 minutes, right? Or no, it doesn't matter whether 4 hour or something. It doesn't matter. But yeah, still 1 hour. This is the shift. Let's see 15 minutes. Still the 15 minutes, that is the shift, right? This is the same shift in the 15 minutes. So if I don't want to wait for this 15-minute shift, as soon as price traded into this area right here, I can literally go down to the lower time frame. Of course, sometimes I also want to see a sweep of this high. I can go down to the one time frame and look for entry right here. Right here. Now, you can see a nice displacement, number one. And again, we also have this low, that price also shift. Now, then you can also use this as your entry right there, stop loss like this. But do you really need to be chasing price like this? That is the question. Why don't you just wait for that good trade? So it's not like you cannot use it, but I don't even advise you guys. Just stick to one particular time frame for the now. That is when you will see whether your edge is working or not. Just one particular time frame. You can be like, okay, 5 minutes will be my list, and I will know where to go to these 5 minutes. You can be something like that. Don't go below that time frame. No. This is you trying to understand your edge and how you can use it. It's not like you cannot use 1 minute, 5 minutes, 15 or something. No, you can, but you don't even know why you are even using it first for now. Do you understand what I'm saying?
Yeah.
You can see me. Already 15 minutes. Do you really think I just know what I'm looking at these 15 minutes? That's why I told you I have different entry style, right? Because I've seen it, play it, used it in this same time frame. So whenever I see it, I know what I'm looking for.
But Andrew, please, do you consider sections before, let's say, taking a trade? Because most times I notice that
it's very important as well.
If you see your entries on, let's say, on the London section and took your trade on the London section, then when New York sections start, it will take you out before going to that same direction that you are targeting.
Okay, yes, there is something like that. Why? Because that New York section only needs more liquidity to go that direction still. That's why it took you out. So most times, the entry you took from London was not like the best entry. Your stop loss was kind of below, or you didn't take the entry on time. So now, for example, look at this trade right here. This was a shift, right? But New York session came back to tap you in for the sell. Do you understand what I'm saying? This is just one example right here. But what happened here? London session was buying up. Were you looking to buy this market or looking to sell this market? That is a question. That is a question. I think we take this trade in particular, but later I think it was going back up the next day. I don't know. I can't remember about this, but yeah, me particular, I think I took this one. Session is very important. It's very important. And what I'm still saying is the same thing. It's just the same thing. Like, if I'm looking at the 4-hour kind of setup or something, then I'm going to be on my 4-hour because I know what time session open. So I'm only looking at time. Okay, what is this time saying? What is this time saying? What is this time saying? So as soon as it comes to that time, so now I'm not looking at the 4-hour at that particular time. So let's say the next 4-hour is going to close so time. So which means it's so time in that New York session, that next 4-hour candle is what I'm going to trade. So then I'm just waiting for that new 4-hour to open. So I'm coming to because it's also New York session time, for example. So I'm coming to my, okay, now let's look at this. In fact, this is a very good example. So this is 11. London session kind of closes for me. Now this is the New York session 4-hour candle. So I know this is the candle I want to trade. Now watch. 11, that is when this one open and closes. 11, 12, 13, 14, 15. So at 15, this candle open because it closes 15. Now look at what happened. We took the low of this candle because this is the candle I want to trade now in this New York session. This is New York session. So we can see price took the low. What? You can aim for the high or this high or even this high, not even knowing that there's a point of interest there. So this is what I want to tell you now. Let me take this one out. So this will now be previous 4-hour low. Previous 4-hour low right here. So what do you want to do? You want to see the 15 minutes shift right there. So I can do it like this. What is the 15 minutes shift? You can see accumulation, price manipulate to the downside, then shift in the 15 minutes. You have a shift here, 1. You have a shift here, 2. Where is your entry? You can use this inefficiency right here. You can use this other block right here. Now, what do you want? You want me to show you something? You can see inside that New York session, price came back to tap you in, and there is your entry.
But let me confirm something. This black candle before we have this these two bullish candle, is it a change in state of delivery?
Which one? This one?
Yes.
Yes. Yes. Because this is the last area price moved down to take out some low, some kind of low. Now you have here one.
Sure.
Here you have one price change, like take liquidity, traded back into this area. Now it now push back down to take out this low before going higher, taking out this high, this high. Now this is a clear change in state of delivery. So you can enter off this here, right here, or this inefficiency.
Okay.
You see? So what happened? Price didn't have much power to push this market back up to where your TP, basically. So this TP or this more area. So that is why I'm also looking. What did I even tell you guys? I would like gold to trade higher first, manipulate, come down, I don't know, to where maybe that inefficiencies or to the previous week low. Then go back up again like this. This is what I told you guys I would like go to see. For so many reasons, I've seen it like this price needs to buy up because you can see when we took out this low, we traded higher, came back to this area for the buy, price never deliver to complete this price action. Not yet.
Yeah.
And me also knowing that this is how price behaves sometimes from the weekly time frame, I already see this. That's why I told you guys that price might come for this previous week high first, then come for the low or some kind of low in this area, then before going back higher. Because I know price might be delivering higher for this week. But first of all, I would like to see price come up, come down, then back up. It's simple like that. That's what I'm telling you guys. So I'll keep saying, me personally. And again, for you guys, listen, this is not like advice, right? Market opened. I would like to buy GU now. I would like to buy GU. But is there a confirmation? Not yet. But I would like to buy GU. At least, maybe it might serve 100 pips right now. I would like to buy GU. You can see what I told you guys. I need price to trade into this inefficiency. And price has already traded into this inefficiency now. I know this is Asia session and there is no like clear confirmation or something, but for sure, for what I can see, I would like to buy GU from this level or into this inefficiency. This is still my stake. I know price is just open, it's not settled yet. It can still go down or something, but like I say, I would like to see price buy from this
question.
Go on.
Sorry, I've not understand this concept of change in state of delivery. Please, can you break it down for me? Please, sir.
Change in state of delivery is a shift in market structure.
Okay. Just a shift in market structure.
It's a shift in market structure. But how well do you understand your shift in market structure is the question.
Okay.
And
Change in state
so
of delivery is a shift in market structure. How well do you understand your market structure?
for me, I prefer to use the wicks candle close above the wicks, not body to body.
It's easy. And wisdom, very like you don't have any problem with it because that is what you believe in, and you must have to see that thing before you take action on your trade. That is why individual trader is different. And like I say, this is what you know, this is what you have seen, this is what you understand, and you must stick to it. If you don't see it, there is no trade for you. That is how you define your edge, you master it, and you are working with your edge. That is what you understand. You must see it. Like I say, without that, there is no entry for you. Make it simple like that. Don't
Okay, sir.
complicate it.
Okay, sir. So for me, I do use. I never knew that was change state of delivery, like a sweep of the previous low. That's the change state of delivery, right? Either a previous low or a previous high.
Yeah, but a sweep with what? Just wicks or
No, with
closure
a
with
body.
body?
With a
Or
body.
what do you mean by a sweep?
A sweep with a body, like when the market closes below. Okay, let
A
me give you
low
an
or a high?
yeah, with a body. That's the change state.
It's simple. That is the same thing wisdom is telling you right now.
Okay.
He wants to see a closure with candle above the low or a high
Right.
to confirm his change in state of delivery or his market structure shift. And you guys are saying the same thing. If that is what you are looking for, then you must stick to it.
Let me see, I just
Until
read
you
it.
see that, there is no trade entry for you. Only when you see that, that confirms your okay. Now we have a change in state of delivery or a shift in market structure. Now I'm not waiting for price to pull back here to enter. You have to stick to it like that.
Okay, sir. Sorry, this is another place I'm finding difficult. Like now,
Yes.
after you change the state of delivery, where's the previous level relate to? Do you think market should pull back to maybe an OC level or
Again, maybe wisdom should answer that question because individual traders are different. Where do you use for your entry? Is it fair value gap,
me I use fair
OC
value gap
level,
and
which
AC
is
levels.
or the other block, which is also OC level either ways. But yeah, but in different markings, it could be here, it could be here, and it could be your fair value gap. It depends on you again. It's what you have mastered, what you have seen multiple times that you will work with. You don't need to work with what I work with. It's what you have learned because one thing is to teach you, one thing is to go and practice it and use it as your own, master your own.
Mm.
Do you understand?
Yeah.
When I say, yeah, I want to see price trade into this area and continue buying because I've seen this. I've seen it many, many, many times. But you might not be comfortable with this because you never see this before. You never understand, okay, what is going on or something like this. Like price trade into this inefficiency and maybe from here buy back into this inefficiency, high time frame inefficiency. This is what I want because this is my entry, my way, my trading style, my entry of. I've seen it. You must be able to be on your chart, practice it, seeing it over and over again to make it yours. Do you understand?
Yeah.
Are you guys copying?
Yes, sir. But I think sometimes for my style of change the state of delivery for price to close above the week, about the close above the previous swing, which is maybe the week. It rarely happens in this system of trading where maybe you're trading the candle range and a sweep. It rarely happens. I
You
might
mean
not
the
have
week?
trade more. Yes, my system of changing state of delivery where price have to close above the week for it to be a correct change in state of delivery. It rarely happens for me.
Ah.
It's
So,
rarely.
okay, let me see. Let's say, let's say, let's say, okay, here now. Let's say here. Mm, 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 mm. Mm, 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 mm. Okay, let's just say, for example, here, you know, let's say this high was a change in state of delivery right here. So price did change in state of delivery. Now you can say, okay, this is the other block that you want to trade from. Now, before we go there, let's look at the 4 hour. So now, I mean, it's not much shown here. I would like to present rather than after price has taken out this low, for example, here, let's just use this one. This was London session. Price took out this low. So now we now go down to, okay, here, this is a very good one and wisdom. Price took out this low and price did a change in state of delivery right here, whether you can use here or something. So you see price closed above the high, the wicks. Then what happened? You see price came there, he moved high, then he now later came back to give you that entry. Whether you want to use this other block, all of this, it doesn't matter which one you are using. You see, later came back. You just have to be patient. It closed above the high right here. Or is it right here? Because this is the highest high that will for this candle to come down. Then it started moving higher, closed above that high. Now look at the pullback first. He pulled back into this area, kind of this inefficiency. He moved higher. Then he also came back to where? This other block right here. However you want to mark your other block, it doesn't matter. You know, you can see it did pull back. What time frame is this? If it's even in 1 hour, but look, 4 hour took out this low. Let me do it again. Why would you say it doesn't close? It really, here, price 4 hour low was taken, 4 hour low. Now you now go down to the lower time frame, whether 1 hour or something. If I even go down to the 15 minute time, it doesn't matter here. It might just give you multiple areas anyway. You can see right here, even with here, right here, there was a 15 minute, after low was taken, there was a 15 minutes right here. That's why I still put it here, right here. Right here, 15 minutes shift in market structure. Then if you want to enter, you can enter all this. As it giving so much headache right here.
So,
Maybe.
but I don't know if
Uh-uh.
I don't know if I'm really correct too. But what I have observed over time
Yeah.
is that immediately price takes out liquidity, that the next candle engulfs the one that took out liquidity. So when I go down the time frame, I use that as my change in state of delivery.
Yes, me too.
It's also right. It's also right. So which means you are not even waiting for this high to be closed above.
Yeah.
It's also right. Those are practice. Those are practice. Like Effie, Rose, like I used to show them this thing many times, long time ago. You can use it like that. And basically, you can even just enter off the next candle that is going to print after it engulf, because this is the next candle now. You can just enter off there and still put your stop loss like this. But of course, for the safety, you can see price move all the way high, then again, later come back again. You know? It's not like you're not correct. It's just practice. How would you understand it? That is the most important thing. That is the most important thing. I know what you are talking about.
I do that too a lot, so I won't lie to you. I do that a lot.
Uh-huh.
Okay, sir.
Who
Okay,
told you
sir.
there's nothing wrong with that? There is nothing wrong with that. But now you are doing it. Have you been putting into practice and see, okay, how effective it is and what risk to reward you can get from it? Or whenever I take that kind of entry, does price pull back later? Have you noticed anything like this? You're not paying attention, but you're only doing it just for the sake of, oh yeah, this was the entry and TP here. You have to notice whenever I'm doing this, what happened after? Have you been noticing anything like that? Have you been putting any note down? Okay, this was my entry style. After liquidity sweep, I went down to the lower time frame. I see an engulf the last down candle that took out liquidity, and I enter off that one. Later, the price was trading in my direction. Then it later came back to the same entry. Did you notice anything like that? Did you put it down? How are you going to master your edge if you don't put something like this down?
Okay, sir, can I ask this one too? For example, a first candle print and the second one sweeps and close, and before the shift happened before the shift happened during the second candle that was printing that swept, it happened and closed. Then the third candle start forming. If there's an order block or FVG there, can we still take entry on that third one to buy to the high?
It depends on, because for FVG to form, that means it needs 3 candles, right? But now you are talking about 2 candles. So let's say,
Because I think it happened here. That is what happened here. The sweep, the candle, the second candle printed, and I think this is about the third candle that came and tapped in before buying.
yeah,
I think it's what happened here. When did you see this liquidity sweep? I think 4 hour, right?
right here.
Where did you spot this sweep on 4 hour?
It's for the 4 hour,
Yes.
right here.
Yes, you can see the sweep. Then the third one that came and tapped in before buying.
Yeah, basically, this is a structure. This is what I want you guys to know. A sweep, a break of structure. This become an under block. It just depends how you want to trade just this. You want to stick to this 4 hour, trading it like confirmation and confirmation. You can do that. It's a lot of way to trade. But it's just the same thing. I'm telling you that liquidity has to be taken. Don't take that thing off your head. Liquidity has to be taken before any other thing will occur.
Okay, so
Do you understand? So
yes,
it's
sir.
always like this. Then if you go to the 1 hour, you can see. Then price broke with body with this candle above this high. Now, I'll take this one. Liquidity, price change the state of delivery. This is just 1 hour. So you can mark this area out, whether from here, immediate or later on. It's all depends. All depends. It doesn't matter. Go to the 15 minutes time frame. Now you have it here. It's all depends. It doesn't matter. It's the same. It's just the same. Do you understand? And favor, you see, like what you just said right now, is a very good thing, you know. But you have to be taking notes on all of this. I trade like that. Who told you I doesn't trade like that? That's why I told you guys that I have multiple way of trading. You really think that I must see like change the state of delivery before I enter? That Egonfi can also tell me that yes, price is changing delivery, because if price is not going to do that, you cannot see that kind of engulfing straight away. You cannot see that kind of engulfing straight away. So it's different. It's way different. That's why I told you I have multiple entry. You guys can also just pay attention and learn like that. You know, you can pay attention and learn like that. So We have what? 1 hour fair value gap right here. And we have 4 hour fair value gap in the same place. And we have 15 minutes area right here that has not been mitigated. Price is respecting all of that. So I expect price to keep going higher from here anyway. Because 11 now, price will open fully in 6 minutes. But here, so any other question like I'm asking because we need to close this meeting.
In this area where you're expecting price to go higher, there is no change in state of delivery yet.
I know there is no change in state of delivery here, but are you not following the previous price action? That is the question. Because the bigger time frame tell me that price needs to go higher. If price will disrespect the last swing that caused the change in state of delivery, then that it's not going higher anymore. So where is the last area? Here. Do I expect price to come all the way down here? No. Where is the point of interest that price may be coming? This inefficiency right here. Because breaking above this high is liquidity, coming back to this area is inefficiency. And also seeking this low of this previous 4 hour candle right here. Right there. It's liquidity into this inefficiency. It's just you have to follow the price action. Like what the market is being like talking to you, what it's saying, it's saying something to you. You have to follow it. So 1 hour, we also have 1 hour inefficiency right here. Yeah. And after that, we have this area taken, then we started seeing accumulation. This accumulation, now you can see price has come to take all of these lows into this inefficiency, which means price may be likely to go higher. That's why I told you, like, you guys, that I'm just looking for GU to probably go higher from here. It's not like I just said that because I don't know what I'm looking at. I've already looked at price action and what they has been doing. So, which means, might likely come here. There is no change in state of delivery right here, but if let me just go to the 1 minute. I mean, even the 1 minute is nothing. But here, you can see how price is moving sideways. 1 minute, 3 minutes, right there, in 5 minutes. So it doesn't matter. But like I say, that is what I would like to see. Am I going to take the trade now? I don't know. Why will I even take the trade, first of all? Is he in my session? No. Even if I would like to see something like this, is he like London session or New York session? No. It's always different. You have a choice. I don't care like what price is doing now, whether he's going to buy all the way up. I would not even care because it's not in my session. But for teaching purposes, I'm telling you like what I see, what price may likely do. Looking at this 5 minutes time frame, you can see accumulation ratio. Price now came down, took this low, and this is where price started this nice delivery. You can see price came, accumulate. Now price came back, where still respecting this low. So I expect price to go to deliver to the same area or tap into this inefficiency. It doesn't matter even if it's little from here to here like this. Price has already tapped in, So this is just the same thing. Then from here you can start coming down. It doesn't really matter. But yeah, this is what I would like, and I believe it's going to do so.
Hello?
Yes, sir. I'm going now. There is no question.
No question for me.
So who